Here to discuss these cross currents, former CFTC chair and current Harvard Kennedy School research fellow, Timothy Massad. Tim, it's great to have you here. Welcome.
Thank you for having me.
Bring me up to speed on whether you're thrilled, excited, or horrified at the idea of having a spot Bitcoin ETF out there.
Well, I guess it was coming. I had hoped, frankly, a couple of years ago that the SEC might take advantage of the position it was in, which was being challenged because it had approved the futures ETFs, but hadn't approved the cash ETFs, to say, well, we'll approve the cash ETFs as long as the prices come from exchanges which meet the following standards. And it would have been a backdoor way of regulating the platforms by saying, well, you got to prevent fraud and manipulation and wash trading, and you got to have transparency and so forth. Well, they didn't do that. So they were kind of in a box after the recent decision. I think the question is, does this bring more people into the market? Does it change where people trade? Right now they do trade primarily on the exchanges. Very few people trade on chain, right? They go to trading platforms. So does it cause people to buy the ETF rather than actually buying Bitcoin through a trading platform, just because maybe they'll be easier to get in and out, more liquid? We'll see. It's kind of ironic, though, because, Bitcoin was supposed to eliminate our reliance on large intermediaries, create peer-to-peer trading. And here we have, some of the largest intermediaries of the world, like BlackRock, offering really a derivative of Bitcoin on a centralized exchange.
Yes, and I'm sure the purists would kind of be rolling their eyes, even while they're thrilled if it helps make Bitcoin prices go higher, as it appears to be doing. Right. How much of this is politics? So, some DC observers have made the point that this does kind of in a backdoor way bring Bitcoin under the SEC's remit because they regulate ETFs, and ultimately regulators don't want to lose power, and this is a way of maintaining it.
Well, perhaps that. I think they were really just in a position after the recent court case where they didn't really have any options. They had tried to resist approving the cash ETFs because they were concerned about, the degree of oversight in the cash market. So I think that's why they did it. I think they'll continue, though, to pursue the enforcement actions challenging whether a lot of these tokens are securities. Obviously, they've acknowledged that Bitcoin is not, but we still have that issue of, which tokens are securities and how do we bring regulatory oversight to these platforms? It remains the same issue.
Right. So does it now kind of ring fence Bitcoin and sort of say, OK, that this can move forward and kind of be mainstreamed, all the rest of it TBD? And what exactly is the regulatory the sort of ad hoc regulatory framework that has now sprung up?
Well, I think we're still in a very muddled area because they don't have general oversight over these trading platforms, even with respect to Bitcoin trading, right? I mean, neither the SEC nor the CFTC technically has the power to tell Coinbase, for example, you have to follow these standards in the trading of Bitcoin. Now, former SEC Chair Jay Clayton and I advocated just that. We said the SEC and the CFTC should just get together and develop standards and say these apply to any platform that trades Bitcoin or Ether. That would have gotten you the entire market, and just create a baseline of protection. We can fight about which tokens really should be treated as securities. We can continue to fight about that, but we really need some basic investor protection in this market.
Would you have any concerns? So if this then opens up other people, and again, maybe crypto is an interesting asset class, those not in it yet, and maybe it's not, but let's just say that people want to mess around with it and they start dabbling with spot Bitcoin ETFs and what's the biggest risk? If it were a family member of yours, would you say, hey, just make sure you don't do X, Y, Z? Or at this point, is it we all are pretty familiar with the product? This is just a sort of highly efficient liquid way to trade it, and there's going to be a handful of providers, and there's really nothing more to it.
Well, let me first say I don't give investment advice and I don't make predictions, but I would say two things. One is it's extremely volatile in price, or three things. It's extremely volatile in price. It's a highly unregulated market, and therefore you just have to be aware of that. There could be, there's estimates that say there's a lot of wash trading where people are pumping up the price, pumping up the volume through transactions with themselves. So it's unregulated. And of course, it's an asset that doesn't really have any cash flows behind it.